Welcome to the deep dive, everyone. Ready to put on our detective hats today?
Always up for a good investigation.
Well, today's case file, ARRY Technologies. This deep dive is all about figuring out, is this company a hidden gem or a potential trap for investors? We got a pretty dense research report to dig through, so,
Yeah, let's see if we can uncover some clues.
exactly. And trust me, there's a pretty surprising twist at the end that I bet you won't see coming. But first, ARRY Technologies, they're all about,
Solar trackers.
right, solar trackers, these huge systems that make sure those solar panels are always soaking up as much sunlight as possible. Ever seen pictures of those massive solar farms?
Oh, absolutely.
Chances are ARRY's technology is behind a lot of them. They're a big deal in that utility-scale solar market.
Yeah, their flagship product, the DuraTrack HZV3, that's kind of their workhorse. It's really interesting how they've adapted their tech for all sorts of different environments. Like, they've got the OmniTrack system, which is specifically made for, like, really uneven terrain.
So they're not just a one-trick pony.
Not at all. That kind of innovation is super important in a competitive market like this.
For sure. Now let's talk about the people in charge. Kevin Hostetler, the CEO, he seems to be very focused on, efficiency, making sure everything runs smoothly. And they are investing in research and development, but their acquisition of STI Norland didn't really go as planned, did it?
Well, yeah, there were some impairment charges related to that acquisition, and that does kind of raise a red flag, doesn't it? It could mean they might have paid a little too much, or maybe the integration wasn't as easy as they thought it would be.
Makes you wonder about their decision-making.
Yeah, a little bit. Like, how are they approaching these big mergers and acquisitions?
But then, on the other hand, they're also putting money into Swap Robotics, which is developing, robots for installing solar panels. That seems pretty forward-thinking.
Definitely a bold move. I mean, automating installation could be a total game changer. Costs would go down, things would get done faster, but it's also a big gamble.
Yeah, I can see that.
Robotics in this field is still pretty new, so it's really, we have to wait and see.
Definitely. Okay, time to put on our financial analyst hats now. Their market cap, it's sitting at a pretty respectable $828.14 million. And they brought in $915.8 million in revenue for 2024. And a 32.5% gross margin seems pretty healthy too, right? But here's the thing. They reported a net loss for the year. How is that even possible with such a strong margin?
Yeah, that's where things get interesting. It's not just about the profit on each individual sale. It's also about the bigger picture. And there are some industry-wide challenges they're dealing with, things like project delays or the cost of materials going up and down that can affect their pricing strategies, and it all eats into their profits.
Oh, I see.
And then there's that debt-to-equity ratio, which is sitting at 2.41. That's a pretty big reliance on borrowed money.
But that does seem like a lot.
It is. That kind of leverage can be good or bad. If everything goes well, it can really boost their returns, but if they hit a bump in the road, those losses get magnified too. So yeah, it's a sign of aggressive growth, but it also adds a lot of risk.
So you've got this company with some really cool technology. They're in a market that's, booming, but they've got some financial headwinds, and they're making some pretty risky bets. I'm starting to see why this is such an interesting case.
Absolutely. And we haven't even gotten to the good stuff yet. Still need to see what the market thinks about them, figure out who's really calling the shots behind the scenes, and then do a full risk assessment.
It sounds like we've got our work cut out for us. But we'll be back in a flash to tackle all of that. Don't go anywhere.
All right, so we've dug into ARRY Technologies' business model and their financials a bit, but now let's see what the market thinks about them. Are investors excited, or are they running for the hills?
It's like, are they giving a thumbs up or a thumbs down, right?
Pretty much, yeah. And right now, it seems like the market's giving more of a, maybe like a sideways glance. The analyst consensus is a hold rating.
A hold, so not exactly a rave review.
No, but it's not a sell-off either. It's like they're saying, we need to see more before we make a decision.
They're on the fence.
Yeah, exactly. They're not totally convinced, but they're also not writing them off completely.
So a little bit of a wait-and-see approach.
Right. But there is one interesting thing. Their average price target, the price that analysts think the stock could reach, it's actually higher than the current price.
So there's potential for growth, at least according to the analysts.
Exactly. They're basically saying, we're not sure about them right now, but we think there's a chance the stock could go up. Of course, recent news hasn't really helped their case. Remember that Q4 2024 earnings miss we talked about?
Oh, yeah. That definitely made some investors nervous.
Yeah, earnings misses always do. But, it's not just the analysts we need to consider. We got to think about, like, the other players in the market, the short sellers, the options traders. What are they doing?
The ones who are really trying to predict which way the stock is going to go.
Exactly. And there's definitely some activity there. We're seeing a decent amount of short interest, which means people are betting that the stock price will go down. And there's been a lot of options trading, which means investors are expecting some big price swings.
So potentially volatile, this one.
Yeah, it could be a bit of a roller coaster. But, let's shift gears for a second. Let's look at who's actually in control at ARRY Technologies. Their ownership structure could give us some insights.
Like, who's really calling the shots?
Exactly. And when we look under the hood, so to speak, we see that a big chunk of the company is owned by institutional investors. Those are the big players, like pension funds, investment firms, that kind of thing.
So they have a lot of influence.
Oh, yeah, for sure. They can really impact the company's decisions. But here's where it gets a little strange. Insider ownership is surprisingly low.
Insider ownership, meaning like the people who work for the company.
Yeah, the executives, the board members. You'd think they'd have more skin in the game, if they really believed in the company's future.
It's true, you'd expect to see more of that. Maybe they're just being cautious.
Maybe. Or maybe they know something we don't. Who knows? But if we look at recent insider transactions, we see a mix of buying and selling. So no clear signal there.
Not really telling us much, huh?
Not really. It's just another piece of the puzzle. Okay, but to really figure out if ARRY Technologies is worth investing in, we need to do a proper risk assessment. And one way to do that is with a SWOT analysis.
SWOT, that's strengths, weaknesses, opportunities, and threats.
Right.
Yeah.
You got it. It's a great way to get a big picture view of the company, see where they stand.
Like a 360-degree view.
Exactly.
Yeah.
So let's start with the good stuff, their strengths. What are they really good at?
Yeah, what do they bring to the table?
Well, first of all, they're the market leader in solar tracking technology, which is huge. And they have a really diverse product portfolio. So they're not just relying on one thing. They've got a good track record. They have strong relationships with some of those big utility companies, and they've got a reputation for being innovative. Remember those robots. So they're not afraid to take some risks, to try new things.
So, strong foundation, solid reputation.
Yeah, for sure. But, no company is perfect. Every company has weaknesses. And one of their biggest ones right now is their financial performance hasn't been great. Those net losses, they're definitely a red flag.
Yeah, we talked about that.
And even though they're the market leader, they're not alone in this space. The solar tracking industry is pretty competitive. There are other companies out there fighting for market share. And then, of course, there are the external factors they can't really control, like changes in government regulations or the cost of materials going crazy.
Yeah, those external factors can really throw a wrench in the works.
Absolutely. But okay, let's talk about opportunities. Where could they see some growth, some real success?
Yeah, what's working in their favor?
Well, the biggest thing they have going for them is the fact that the world is moving towards renewable energy, and solar is a big part of that. The demand for solar is just exploding right now, and ARRY Technologies is in perfect position to take advantage of that. Plus, the cost of solar is going down all the time because of technological advances, which makes it even more competitive with those traditional energy sources, like fossil fuels.
So they're riding a pretty big wave, but there's still some choppy waters ahead.
Exactly. Lots of potential, but also lots of uncertainty.
Wait a second, though. We promised our listeners a mind-blowing fact about the future of solar energy. I think it's time to drop that knowledge bomb.
Oh, yeah, you're right. Get ready for this. By 2027, solar power is projected to be the #1 source of electricity worldwide.
Whoa, bigger than everything else.
Yep, bigger than oil, bigger than gas, bigger than wind. The future is solar.
Wow, that puts ARRY Technologies in a whole new light, doesn't it?
It does. Even with their challenges, they're playing in a field that's about to explode. So now we've got to take everything we've learned, all the evidence we've gathered, and see if we can come to a conclusion. Is ARRY Technologies a good investment or not?
The moment of truth. What's the verdict?
Okay. After looking at everything, the business, the management, the financials, what the market thinks, who owns the company, and the risks involved, I'm going with a hold for ARRY Technologies.
A hold. So not a buy, not a sell, just wait and see.
Pretty much, yeah. There's definitely potential there, but there are also some serious concerns. It's a company that needs to be watched closely. And, Investors need to think about their own risk tolerance and what their goals are before they make any decisions.
It's not a one-size-fits-all situation.
Definitely not.
And remember, everyone, this is just our analysis based on the research we've done. We always encourage you to do your own research, come to your own conclusions. And hey, why not share your thoughts on ARRY technologies in the comments? We'd love to hear what you think. Buy, sell, or hold. Let us know.
Yeah, let's keep the conversation going.
And if you're really looking to level up your investment knowledge and learn how to analyze companies like a pro, make sure you subscribe to the Stock Analytics AI YouTube channel.
We break down all those complicated financial concepts, dive deep into market trends, and we use the power of AI to help you find those hidden gems and avoid the potential pitfalls. It's the best way to become a more informed and confident investor.
Knowledge is power, folks, especially when it comes to your money. But before we go, just a quick reminder, this deep dive is for informational purposes only, and it's not financial advice. Always talk to a qualified financial advisor before making any investment decisions.
Couldn't have said it better myself. Investing always involves risk, so do your research and seek professional guidance when you need it.
Thanks for joining us on the deep dive.